on the Sensex as we speak. Well, let's get you the lowdown of all of the stocks to keep on your radar, which are buzzing in trade and in the news on charts as well. Our team of research analysts all standing by, and on technicals is Jay Thakkar. Well, let's get started then with the first stock to watch out for. And it certainly pays to have been invested in Jet Airways at the start of the week, Mubina. It's been quite a phenomenal ride in the past couple of days. What's the latest?
Yes, a 40% uptick is what we've witnessed in the last couple of days in a Jet Airways. 342 rupees over there. Remember, a couple of news flow coming in from Jet Airways. First up, the biggest news is that Tata may be considering rescuing Jet, investing money over there. The government, in fact, as well, have asked, is said to have asked Tata to essentially salvage Jet Airways, and that is something that may be mulled today at the Tata Sons board meeting. So in the midst of all of that, we are seeing the stock price rally.
All right, watch out for Jet Airways, 342 and going strong on the back of that news. Meantime, pull up a Reliance infrastructure within the ADAG pocket. This sure is in focus today. In the limelight on the downside, Jay, where do you see it headed from 330?
Hi, good afternoon to you, Avan. Well, I would say that the chart structure of Reliance Infra is absolutely weak. I would say that the stock has been forming low tops, low bottom, and we have also seen a clear sell crossover in its momentum indicators, which is quite negative going forward for the stock. And I would say the way we have seen a breakout happening on the lower side in this stock from the range, I think on the upside 345 is a very crucial resistance now till the highs are not taken off. This stock is clearly heading towards the levels of 310 initially, and maybe thereafter 300 as well.
All right, that's important levels to map out on Reliance Infrastructure, currently down 6%. Meantime, Karanya, ONGC, Oil India, all in focus along with IOC with respect to the divestment news.
That's right. We had seen a couple of reports earlier this morning about the fact that the government is looking to divest stake and raise about $2 billion by selling its stake in not only ONGC but Indian Oil as well as OIL as well simultaneously. This is in order to achieve the divestment target which the government had set at 80,000 crores for this year. So this stake sale is likely to help the government inch closer to that enormous target set by them. They're looking to sell about 5% stake in ONGC, 3% in IOC, and about 10% in OIL.
All right, all of those stocks are in focus in trade today as the government is looking at ways to meet its divestment target. Meantime, to the flashes on your screen, and this pertaining to the buyback news for Coal India. In fact, the government is planning a 5,000 crore rupee mop-up. This is going to be via share buyback, and it's going to take place by the end of January according to news agencies. The government is expecting the Coal India share buyback and is likely to garner close to 1,000 crore rupees on the back of the same. Remember, the government has that massive divestment target, as we're just talking about, $2 billion, and that is what it is targeting. So clearly, a lot of these stocks are in focus on the back of this news. Moving right on then, it's Raymond that has caught your eye, Siddharth.
Well, yes, Avan, we are seeing after 2 weeks of consolidation, the stock has given a price volume breakout from that resistance zone of 775, and we are seeing very high volumes in both the segments. So a case of price volume breakout. We are not seeing too much of formation of long positions over here, but might be it is a blend of short covering plus formation of long position which is taking Raymond higher.
Right, lots of factors keeping Raymond in focus, 784. Meantime, let's flag off Siemens. Tomorrow it's going to come out with its earnings toward the fag end of the earnings season. We've been seeing the stock which has been in focus over the past few days. In fact, gained something like 8 to 9% over the last 2 trading days. Jay, what is your reading on the charts?
I think, Avan, this stock has clearly provided a breakout on the upside from a downward sloping channel. Along with that, if you see today's data, there has been significant long build-up here. We have seen the open interest rise by almost 11-12% as far as the last data which I had seen, and I think the way the volumes have also increased with a clear buy crossover in this momentum indicators. The short-term target which we have on Siemens is 1,000. As a disclaimer, I would say that we have also recommended this to stock to our clients as well. On the lower side, I believe now Avan, that in the very short term, 955. That's the level which is very important on the lower side. Till those lows aren't broken, 1,000 is the initial target, and if it succeeds to take off those levels as well, then 1,040 as well.
All right, that's Siemens for you, 4.5% higher in trade. Meantime, let's move on to the very contentious newsmaker, Mobina, and that is Yes Bank.
Well, yes, the last couple of days have certainly seen selling pressure coming in the private lender. It's another 7% of a drop witnessed in this one. And remember, it's already after that 7% decline we witnessed in trade yesterday. Of course, yesterday there was a news with respect to Ashok Chawla resigning, and today OP Bhatt has resigned as the expert of the search panel with immediate effect. Of course, the search and selection panel will continue with their job, but essentially OP Bhatt resigned because there was conflict of interest with one of the persons who has been shortlisted for the job. So that may or may not be the reason why the stock is tanking, but the fact of the matter is that 2 days and we have dropped 7% for 2 consecutive days.
That sure is keeping the stock under pressure. Keep an eye out on Yes Bank. Let's move on then and talk about Eicher Motors. Karanya, flag off what exactly Deutsche Bank has to say.
Well, Deutsche Bank is sounding quite positive. I'll come to that later. But first, what essentially has happened is yesterday, Java motorcycles made a comeback in the Indian markets. Day before yesterday, we saw Eicher Motors 650cc twins also have that mega launch in the Indian space. So clearly, we're likely to see a lot of competition play out in this particular segment, and it's only likely to address the vast potential that lies in the premium bike segment in the country. And of course, Eicher is also looking to scale this up abroad in a big way as well in the overseas market as well. And Deutsche Bank is also giving a thumbs up on back of these triggers.
All right, very optimistic. Target price up, and clearly it's going to be a game changer according to the brokerage firm. Moving right on then, let's flag off an NBCC, which is looking a tad tempered in trade today. What is it that you've deciphered on the charts today, Siddharth? What are the patterns in terms of volumes as well?
Well, it might be just 2% down today, but then we did see substantial amount of fall yesterday too. But what is common? Formation of short positions. What else is common? High volumes. So NBCC, not just in today's trading session, but in yesterday's session too, saw huge volumes in cash and future segment and formation of short positions. Clearly a case of a stock which is under pressure because of formation of shorts.
All right, watch out for NBCC, a significant build-up being seen in futures. Moving right on to HPCL, which is taking a bit of a back seat. Remember, you have most of the counters which have been rising very steadily over the past many trading days after we have seen that drop as well in crude oil prices. Remember, it does come as a boost to most of these companies as well as to the economy in general, which import nearly 80% of their crude oil requirement. A lot of them also did undertake a price cut last month, which hurt the margins as the government wanted to cushion the impact of the high crude oil prices. So this has incidentally been one of the best OMCs since the fuel excise cut. The management has also said that the crude fall impact will reflect in retail prices. Well, let's move on then to stock number 11 and flag off what's going on in Cipla. Jay, let's talk about the technical trends today.
Sure, Aman, I would say that we have seen a sharp cut coming in Cipla post its numbers, and the entire fall, I would say, Aman, as far as we see, has been clearly a 5-wave declining structure. Along with that, we have also seen some good short build-up happening in Cipla. So generally, Aman, what happens is when we have a 5-wave declining structure and short build-up, post that we have some short covering happening and the retracement happening on the upside. I think that Cipla has a chance to go up till the levels of 549 on the upside due to short covering, and on the lower side I believe that 524 is a very good support. So from the point of view of risk reward, I think at least for the short term there's the case of short covering, hence one can go long on this, taking the advantage of this.
All right, keep an eye out. That's the word coming in on Cipla, 532. Meantime, take a look at Shilpa Medicare, which is having a pretty solid run. Mobina, what's the trigger?
Well, Shilpa Medicare said that it has received the tentative approval from the US health regulator of dimethyl fumarate delayed release capsules. This essentially is used for the treatment of relapsing forms of multiple sclerosis. In fact, it's also a generic of Tecfidera, and the company did say that the US market for dimethyl fumarate delayed release capsules is approximately $3.46 billion. That's quite a huge market over there, and on account of that, on an intraday basis, we did see the stock run up as much as 9%, cooled off from the day's high.
All right, keep an eye out. That's Shilpa in focus, the tentative US FDA nod for that sclerosis drug. A multiple sclerosis drug is keeping the stock in focus. But let's move on then and talk about another outer stock currently after Aisha, and that's M&M. What was the news?
That's right. Literally minutes ago, we got an update from Mahindra and Mahindra, which has decided to raise the prices of Marazzo by 30 to 40%, 30 to 40,000 come 1st January, and that's an important update. We did, however, see the stock just slip up a few notches lower right after the update came out. But yes, it's an important update. Clearly, the company seems to be seeing enough traction for them to increase the prices of this newly launched model just within a quarter of the product or the model being launched.
Keep an eye out on M&M. That stock is in focus. Moving right on, so is Lemon Tree. In fact, it's on the brokerage radar. It's in the news as well. They've signed a license pact for a 76-room property in Odisha. They have been going on a full-fledged spree with respect to their expansion plans, which has been very evident. In fact, CLSA flags just that off in their brokerage note. They're saying that the expansion plans are broadly on track, that the ADR hikes are lower than expected, but they maintain a buy rating with a target at 87 rupees a piece. Currently, it's 71.5. Let's shift gears then and talk about Jubilant Foodworks, Siddharth. And the stock isn't having the best of days today.
Well, we are seeing some intraday correction, and which you can see on your screen. Otherwise, stock was doing fairly well, and you have to see, positionally, it was showing 6 consecutive day of gains, and now it is 0.5% red into red. And the kind of high beta Jubilant Food is, the kind of stock it is. 0.5% doesn't mean much for this counter, and the positions which are getting formed, Avan, are more on the positive side. So this intraday correction should not be given too much of weightage. Otherwise, positions and the orientation of stock is towards the upside.
Right, watch out. That's Jubilant Food, which has come off definitely from the high point of the day, now down 0.5%. Time for a quick break. Stay with us as we count down to more stocks to keep on your radar. This is Market Fatafat.
In a so
You are on top of the world with Times Network. And you're watching ET Now.
He knows the market trends today and has mastered them over the last 15
JSW Steel or NMDC. I would say my favorite short would be definitely NMDC, which has clearly broken down from a bearish head and shoulders pattern. But then as far as JSW Steel is concerned, I would say one on the lower side, 329. That's a very crucial support. That's the 200 DMA of JSW Steel. If 329 level gets broken on the lower side, then I would say this stock can slide till the levels of 310 as well. Now on the upside, 339 is a very crucial resistance. So those already who are short in this stock can maintain a stop loss of 339, continue holding this till 329 and thereafter 310.
Alright, some important levels. That's the take coming in on JSW Steel, but you can look to continue staying invested. Meantime, you have Vodafone Idea, which came out with its numbers, and now Bharti Infratel and Vodafone in news, Mubina.
Well, yes, that it is. Bharti Infratel has emerged as the front runner essentially to pick up Vodafone Idea's tower assets, and that's the reason why you are witnessing this massive uptick, more so in Vodafone Idea. In fact, as we speak, it's at the day's high. The reason being that essentially they're going to get the much needed money, which would, for its fiber assets, which would essentially help the company tackle the rising competition in the form of Bharti Airtel and obviously Reliance Jio too. So this is something that is a positive for Vodafone India. Remember, there's that equity fundraising exercise as well, 18,000 crore infusion from the promoters. That's UK's Vodafone Group as well as the Aditya Birla Group. It's sort of signaling to rival its commitment to stay in the Indian telecom business. Plus, we could be getting some more money from Bharti Infratel for the fiber assets. So this is something that's causing Vodafone Idea to perk up in trade.
Alright, it sure is a nice 12% up move on the stock, but quite the contrary, Karunya, when it comes to SRF, the stock down in trade.
Probably because the company has extended their capex estimates from 180 crore rupees to 257 crore rupees, and this is primarily to enhance and integrate their Gujarat agrochemical plant. So that's the only news development that we have at this point of time. Probably why the stock is also under pressure today.
All right, that's something to note, but the capex plans are certainly on in full throttle. GAIL India is a stock to flag off, and it's on the Jefferies radar. They're advising a buy rating on the stock, and in fact, due to the weakness, they believe that this is a great opportunity to enter the stock. So they're saying buy the weakness. Target price is at 450. They believe that while the near-term environment does look challenging, a solid medium-term outlook is seen. Fundamentals will bode well. 344 is where the stock is at. Moving right on then to number 20. So that let's talk about Strides.
Well, after 4 days of consolidation, Avan, this stock is seeing an up move. Before 4 days, there was a huge spike in price backed by strong volumes. So this consolidation was actually good for stock. And when a stock gives an up move, then consolidates and then again give a up move, that's a sign of a durable trend. And we are also seeing formation of long positions in future segment, which is confirming that the stock is probably poised for further upside.
All right, that's the trend. Strides up 3%. Meantime, Jay, let's talk about another stock from the mid-cap space that's hogging the limelight. Decisively above 200 is Everready. Do you see it sustaining?
Absolutely. As a disclaimer, I would like to say first, Avan, that Everready is one stock which we have recommended to our clients as well. Now, what's happened here is that we have seen, Avan, this stock falling right from the levels of 465 to 175 levels in a straight unidirectional way in a 5-year declining structure. Now, last week we saw a good positive flows coming in this stock. A retracement of at least 38% on the upside is expected. 270 should be the target going forward. One can buy this definitely with a stop loss of 185.
All right, that's certainly something to watch out for. Look to buy into the stock. Aarti Industries, meantime, let's flag off this one, Mubina.
Well, Aarti Industries has seen some promoter activity. Chandrakant Gogri, who is classified as a promoter of the company, has been disposing stake in the market. So it's about 1.22 lakh shares that he's disposed between the 12th to the 14th of November. The stake has been reduced from 4.15% to 4% in the company. But do remember, the stock has seen quite an uptick, 21% higher in the month of October. Today, some profit booking witness.
All right, that's a stock to keep on your radar, Aarti Industries. Meantime, let's move on and talk about Tata Sponge as well. What's the latest news, Karanya?
The news is that the board of the company has approved a preferential issue of almost 1,000 crore rupees. This will be to their parent company, which is Tata Steel, and do note that the issue will happen on a private placement basis. So that's an important update on back of which the stock was buzzing in early hours of trading, but it's cooled off a fair bit from those high levels, currently higher by just 0.3%.
All right, that's the take coming in. Let's move on to another Tata Group stock, and that is Tata's TCS rather. In fact, the stock may be tempered in trade, but CLSA sure is very bullish on the long-term prospects. They believe that the large deal wins are going to sustain for TCS. In fact, they're reiterating their buy stance. They've got an aggressive price target at 2,600 rupees. They believe that there's a lot of increasing optimism, largely on account from the medium-term growth, and they're advocating a buy on the stock. It's holding out in the green by 1/3%. But let's shift gears then and move from IT to banks. What's the word on Axis Bank, Siddharth?
Well, Axis Bank and ICICI Bank, these are two banks which a lot of investors are preferring to buy from a medium to long term perspective. But even from short term perspective, these stocks are adding long position. Now Axis Bank is in an uptrend, but if you just see today's data, you will see huge pile of positions and stock price is down by, in futures it's down by 1%, in cash it's showing you on your screen that it's down by 0.6%. So people will tend to read it that this is short, but that's not short position. It's rise in open interest and then give importance to what has happened before, and it's more of formation of long position. Yes, 630, 635 is acting as resistance, but for a 600 rupees stock, 7-8 rupees move to breach that resistance is not a big deal.
All right, Axis Bank at 621. Well, just about 4 stocks left to go. Jay, let's flag off Loris Labs. What is your reading on the charts today?
Well, as far as the this stock is concerned, I would say that we have seen a good recovery from the lower levels, and the way the momentum indicators Avan has clearly been showing a positive divergence. At least for the short term, I believe that there is a good chance for this stock to inch towards the levels of 434 initially. We have seen a good breakout coming in today's trading session. 434 will be the short term target for the stock. On the lower side, 386 will be the stop loss.
Thanks for flagging off those levels, Page Industries, and it looks like the pain is not stopping, Mubina.
Yes, it is not. Remember, the company came out with a dismal set of numbers in the second quarter, and on account of that, we have seen significant selling pressure coming by, and it's not just limited to today or yesterday, but for the last 5 consecutive trading sessions, Page Industries has seen red on the screen. Last week, it has fallen almost about 16%. We've had some sell calls as well from brokerages post the Q2 numbers. 16% gone for this week.
All right, let's move right on then from Page Industries to Ajanta Pharma, which is up in trade today, Karanya.
That's right. It's on the back of a tentative nod that the company has received for Solifenacin and Succinate. Analysts are expecting the launch of the drug to happen by the first quarter of FY20, and it could have, in fact, an annual sale of more than $1 billion. So on back of that, everybody seems to be quite positive on the stock's growth prospects going forward.
Yes, they do, and they're also very positive on Glenmark Pharma. That's the next stock to flag off. That's largely on account of the company receiving their US FDA approval for teriflunomide. But the stock has come off from the day's high. It's got the US FDA nod for this drug, and the company's current portfolio has about 142 products for distribution in the US market. Last stock then, Shrey Infrastructure, what a mover, Siddharth.
Yes, and this move is coming after prolonged period of fall. Stock was floating around 140, dipped down to 30, and now showing bounce back on a lower base. It seemed to be very big move in terms of percentage, but we have to take cognizance that stock has corrected substantially. But today, some long formation, very high volumes in cash market. Seems to be that someone is accumulating at lower levels.
That's all the time we have then on this show. Thanks guys for joining in. Stay tuned for closing trades.
The